Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. I'm Phil Carroll. It's the 30th of October and what a week it's been. The week that saw Rishi Sunak installed as Prime Minister and now with a complete U-turn on fracking. A devastating blow for some companies and particularly the shale gas industry in the UK. We've also seen the death of the Ford Fiesta. I know it's not one of your talking points, Kev Cars, but being one of the UK's best-selling small hatchbacks. And we've also had the world's richest man, Elon Musk, complete his $44 billion takeover of Twitter, where he tweeted the bird is freed. And in a moment of pure cheesiness, he walked into the San Francisco Twitter headquarters carrying a kitchen sink with the caption, "Let that sink in." And he also wants to create a new platform, which is called X, which will be a platform for everything. So where do you want to start on that lot, Kev?
Well, yeah, it's the week that was. It's another crazy week in the world, hey? And yeah, lots of things happening. I feel the markets are starting to settle a bit. I mean, if you look at what's happened in the US, they had higher growth than they expected. This probably should signal we're getting close to the top of interest rate rises if they're seeing growth. So you can speculate maybe the dollar starts to come off a bit, which is going to help other currencies and help help around the world in terms of inflation as well. I think if the dollar decreases, we're going to reduce inflation rapidly because of all the exports from the US. So, yeah, I think things are settling down. And I mean, in the UK, obviously, with now I think we have a prime minister who's level-headed and he's going to start to understand and run the economy in a good way. You know, he's an economist at the end of the day. An ex-banker. So yeah, I see things calming down and the market's moved. I mean, few stocks moved and then settled back down again. So yeah, it's interesting times. If we think as the market as a forward-looking instrument, then will the world be in a slightly better place in 6 to 12 months? I think it probably will. Things will have settled down, but there's a lot of saber rattling going on as well, isn't there? Mr. Putin decides to sit and observe nuclear tests and then says, "I'm not threatening nuclear weapons."
Yeah, did you see the journalist who said to him, basically said, would you consider using them, and something about, we're not really ready for heaven right now, because he made a statement that Russians would go to heaven if the nuclear, and they effectively just paused. Really uncomfortable silence, and the journalist said, "That's worrying. That this silence is worrying." He said, "Well, I just did it," and they smiled and started laughing. "I'm just doing it to worry you." So I mean, the guy's like playing with the whole of his whole nation, and their lives are in his hands, and he's making a joke out of it. It's absolute it's madness.
He's a sociopath, isn't he? He doesn't care. Well, I mean, he really doesn't care, because I mean, obviously the Russians are in. It's 300,000 people that they've called up. There's all sorts of.
They're already returning home, aren't they, in body bags? Those the latest conscripts. So,
if it was a free society to demonstrate as they wish, there would be crowds on the streets. Basically saying no, we don't want to do this. We don't want to do this. But it's not. It's a command economy. It's not free. Never has been. So that's where we're at.
Yeah, I mean, we're starting to see some IPOs coming to market as well. There's Georgina Energy's a forthcoming one, which is in the helium space. And there was another recent IPO that came to market, a company called Unicorn Mineral Resources. And that brings us on to this week's guest. We welcome Richard O'Shea, CEO of Unicorn Mineral Resources. Welcome, Richard.
Thanks, Phil. Glad to be here.
Welcome, Richard. I mean, this is really all we need now, isn't it? That the unicorn has arrived on the planet.
Yeah, this with the name, if we had $1 billion capitalization, that would be nice. But early days, we'd start at the bottom.
Unicorn were admitted to the standard list of the main market just on Thursday of last week. But the company was founded by yourself and other directors in 2010. Do you want to give us some background on both yourself and the company, please?
Well, previously I was a chief executive of a company called Avoca Gold, going back many years ago. And that was eventually backed into a Russian company. I stayed on as non-executive for a while. and then I stepped down. So a few years later, I was having lunch with a few friends of mine in the Unicorn restaurant in Dublin, just off Stephen's Green. And they said, why wouldn't you start up a new company and go again? So I agreed to do that, and they agreed to back me financially. And I said, the key to a good company like exploration is a good geologist. So I had met Dave Blaney when he was doing presentations for other mineral exploration companies, companies that had shares in myself. And I said I'd approach him, and would he come to the other side of the fence and become a director? So he agreed to do that. And then he set about picking up new licenses for Unicorn. And at the time in 2010, a lot of companies were pulling out of Ireland. So there was ground becoming available. The zinc price was down at $1,750 a ton. And as you can see now, it's $3,000 a ton or thereabouts. And in euro terms, it's even better, because the dollar to the euro back then was about 135, and it's $1 a euro now. So we're on a par. So Dave picked up the licenses, and we set about exploring them. And eventually we picked up the Kilmallock license, which is our flagship. And we did some exploration on it. And lucky for us, the government did a TELUS airborne survey over the whole of Ireland, which covered the Kilmallock block. And that was a magnetic and electromagnetic survey. The plane was flown about 80 meters over the ground, and it helped us identify faults and good areas for drilling. And we've done some ground geophysics after that and other surveys to narrow down the target area. And some recent drilling has produced some fantastic drilling results.
Let's talk a little bit about zinc, because obviously Ireland is ranked #1 for zinc per square kilometres in the world. But just can you give us some industrial uses or some important uses of zinc, Richard?
Zinc is used for the galvanizing industry mainly at present. But going forward, zinc will be used in storage batteries for wind farms and solar farms. And in that sense, it's a green metal going forward. Unlike lithium, which is suitable for small items like phones and laptops and things like that, the zinc storage battery for the wind farms and solar farms don't have to be that compact. And zinc has a big price advantage over lithium, which has gone very expensive over the last few years.
Yeah, absolutely. And you also mentioned in the results, I think, that there was a credit for silver as well. So yeah, with this zinc, there's some silver. What sort of rates are we talking about in terms of grams per ton in the silver?
Well, the variation is there's one hole had 204 grams a ton of silver, another one had 133.79 grams a ton, and the others varied from 23 grams a ton to 57 grams a ton. So that's going to be they'd be positive additional credits.
Significant credit. No, on some of those.
Yeah,
200 plus grams of silver is almost a silver mine. Never mind.
It's a bonanza grade of silver. That.
Never mind the zinc.
That 200 grams of silver was found in the same 1.2 meters as the 48.9% zinc, and just to add in, there was a 7% lead in that 1.2 meters as well.
Okay, so that's just pure metal, basically, that's poured out of.
That's about as high as you can get.
That's got to be the VMS.
In the sulfide.
Is that the VMS, isn't it?
Well, it's in the it's a massive sulfide, is what they describe it as.
Yeah, well, VMS is a sulfide. Yeah.
Yeah. So I mean, basically.
But now that's exceptional. That's only 1.2 meters. So it's within a bigger intersection of 10.5 meters, grading 8% zinc, 1% lead, and 61 grams a ton silver, which is the average over the 10 meters.
But if that fault, if you like, continues for any distance, then that's gonna add up to some serious tonnage of rock, you would imagine.
Well, we're hoping that the ore body we have at the moment is a reasonable distance away from the fault line, and as we get nearer to the fault, the grades will get better.
Okay, so you're thinking that those good grades are a distance away from the fault line based on the magnetic?
Yeah, but we're only estimating where the fault is at the moment from aeromagnetics.
So, I mean, Ireland, you kind of don't think of it as being, let's say, mineral rich, but obviously we know about Conroy Gold, and we did allude to him earlier on, and the fact that there's high grade gold, and there's a JV with a major there. I believe that Ireland is one of the world's most fertile geological terrains for zinc. So this is obviously zinc, lead, Do you want to just talk us through kind of the geology and some of the other projects in the past, like the Galmoy mines and what they've kind of reaped over the years?
Well, Unicorn actually has a licensed block adjacent to the old Galmoy and Lachine block. And up to recently, when the Lachine and Galmoy mines were in operation, between the two of them and the Navan mine, Ireland was the biggest producer of zinc in Europe. The Navan mine is still in existence and has been for a long time. And they've recently extended the ore body in the mine. The last figures were 111 million tons at 7% zinc. So that's a substantial employer, and it brings in good revenue for the government as well. In that regard as well, the government is very friendly to the mining industry in Ireland, and we have no problem getting permission to do drilling. Now, we have to go, every time we drill, we have to do an environmental report. Once the government gets that and sees that it's okay, we get permission to drill.
Very good. So what's been happening in the last 10 years then? Give us just a bit of a background, because obviously you're not a new company to the world, you're a new company just to the market.
Well, initially we picked up licenses in Waterford and Gert, but we've dropped them since, and we did drilling programs on them. But the recent one, as I say, is the Kilmallock one, and we're hoping to start a drilling program early in the new year on that and extend numbers that are there already. Previous drill holes, if I just
give us an idea of what sort of percentages of zinc that you found in the drill holes.
There was one hole intersected 5.3 meters at 9.5% zinc. Another one had 10.5 meters at 8% zinc, which included 1.2 meters at 48% zinc.
Holy moly.
And there was another hole had 4.5 meters at 16.53% zinc.
So what is an economical percentage in zinc? Is it sort of similar to copper? Or
the ballpark figure for a mine is regarded as 10 million tons at 10% zinc. If you can get an ore body with 10 million tons at 10% average zinc, you could turn it into a mine.
Okay. And
now,
you think
needless to say, if the grades are higher than 10%, you might get away with 8 million tons.
Okay, and you think that's viable based on this? I mean, obviously, you've hit a section there with 48% zinc, I think you said, which is crazy. But the extra drilling is going to prove that system. You think it's going to prove that you have a very
at the moment the drill holes
system?
are maybe 100 meters apart. So what we need to do is drill in between those 100 meters to make sure the ore body is continuous, and also we want to extend it. So we'll be drilling a couple of 100 meters out in every direction. Like this ore body, as we have it at the moment, is open in all directions. So we would hope to extend that by the drilling program in January and future drilling programs.
And from the point of view of its depth, it's an open pit, is it? Is basically just going to be able to
no, you won't get open pit permission in Ireland. But as it is, the depth is between 180 meters and 300 meters at the moment. Now, to put that in perspective, the Palace Green project owned by Glencore, which is 20 kilometres to the north of us, and it's in the Limerick Basin as we are, they're down at depths of 1 kilometre depth, which is very expensive drilling. Like for us to drill a hole at 300 metres, you're talking about 30,000 euros, whereas they're talking 100,000 euros a hole.
So do you think, and is this one of the things with the test programme, is that, or the drilling programme, that the zinc is still there at depth, as in it's going to go further down?
Well, no, what you hit is you hit the base of reef. The zinc sits on what you call the Walsartian reef, and the zinc body usually rests on the bottom of the body. It comes up through a fault and it flows then onto a level and sits there. So you wouldn't be going down any deeper than we've gone. But the whole area, like the Kilmallock license, is on what they call the Rathdowney Trend, which included the Galmoy and the Lachine mines. And there's a company called Group 11, which owned the licenses adjacent to us. And they made an announcement last September. They drilled in a project at Ballywire, which is just 10 kilometres to the east of us. And they hit at grades of 16% zinc. So that's encouraging as well, that they're that near us and they're on the same trend and in the same kind of ore body.
So just remind me again, what did you say was required for this to be economical? You need 10,000 tons of zinc?
The rule of thumb is 10 million tons of ore at grading 10%.
Okay, so this is then 1 million tons of zinc.
It'd be 1 million tons of zinc, yeah.
Over what sort of period is that normally mined over? Over 15 years, over 10 years, over
Well,
20
the
years?
Galmoy and the Lachine mine, the Galmoy mine had 9.7 million tons, and I think it operated for about 10 years. And the Lachine mine had 22.4 million tons. I think that operated for 12 or 13 years. I mightn't be totally accurate on that, but that's the ballpark.
Yeah, but that's the ballpark. So we're basically talking about a 10-year mine. And if you're mining that period, you're mining 100,000 tons a year at full production.
Yeah.
Okay. So that 100,000 tons would currently produce what, about 300 million?
At $3,000 a ton, it'd be gross price, though, wouldn't be net profit, like needless to say.
Yes, no, absolutely. We're not talking about that. That's just revenue and then the cost of mining, obviously.
And from Unicorn's point of view, the cost of building a mine would be very expensive. So we would hope to bring this project to a stage where one of the majors, possibly Glencore, who are only 20 kilometers away from us, might buy the licenses off us. And if they build a mill up in Palace Green, which is only 20 kilometers away, they might truck ore up to their processing plant.
So they already have a processing plant, or they?
No, they have 44 million tons at 7% zinc at the moment, and they're still expanding it. And our geologist, Dave Blaney, was part of the finding group of the Palace Green project, and his company BRG are actually doing the work on the ground for Glencore.
So Glencore offering you £100 million and saying go away, you would be a good result.
Would be happy to go.
Yes. No, I mean it's good. It's good for investors to understand what you're trying to do. So if you prove this up and then Glencore come in and say, "Here's the money, thank you very much," then
or any other big major, like it's just I've just mentioned Glencore because it's so adjacent to us.
Yeah, well, obviously, economies of scale for Glencore is going to be sensible, isn't it? You know, it's. You said they have 44,000 tons at 7%.
44 million tons at 7%.
Sorry, 44 million. Yeah, so that's economical because of the 44 million rather than
at the 7%. Size. Yeah.
Whereas you're hoping to have a higher grade, hopefully, and this a smaller amount, maybe. I mean, you can't envisage that this license would have 20 or 30 million tons, or you don't.
Usually these Lachine wasn't just one ore body; it was a series of lens of ore bodies, which totaled up to 22.4 million. So, with the size of our license, there's every likelihood that we could find more pods independent of the pod we've already found, which could double or treble the size of the potential ore body.
And the magnetic study that was done shows that there could be more pods, or you don't know?
It shows up fault lines, and the fluids that bring the zinc to the top come up through these fault lines, and usually the ore is very near the fault line. So we've identified the fault lines now that we think the fluids might have come up through, and we would hope to drill in those areas and hopefully be successful.
So the drilling's going to start when?
Well, now that we've got the money, we'll have to do an environmental on-the-ground report for the government, and we'll send that into them and request a permit to drill. With Christmas and that in the middle and governments taking time to come back, I would say early in the new year we'll start a drilling program. Okay,
so drilling in the new year, and then maybe results around March, April time if all things go well.
Please God.
Yeah. Very good. Okay, so tell us a little bit more about yourself in terms of what are your interests, Richard? When you're not looking for zinc?
Are you talking about sport, or I like to play golf?
Yeah. Anything. You play golf?
I play a bit of golf, yeah.
So were you at the Ryder Cup at the K Club there?
I was, yeah.
Back in the day?
I went up one of the days. I didn't go up all the days, but it was good.
I might have bumped into you then. I was there that.
Oh, very good, yeah. And
it was a great event.
I've gone to a number of Irish Opens over the years, as the fellow says.
Well, you're actually on the Sunday roast. So the Sunday roast basically asks you, what would be your preferable Sunday roast? If you had to choose your Sunday roast?
I like a roast beef or a leg of lamb.
Well done.
Yes, indeed. Is it well done or medium rare?
No, I like my steaks well done.
Yes, good old
You
Irish
knew you were
person.
going to say that.
With lots of mushrooms and French fried onions and a few chips.
Indeed, indeed. Sounds good. Sounds good. Any pepper sauce or mushroom sauce or
Yeah,
anything
I'm
fancy?
into a bit of pepper sauce on my steaks.
Yes, all good, all good.
And a nice glass of red wine.
Indeed, indeed. Well, Phil will join you. As we said before we started there, that we will come and visit you in Ireland probably in April, May. So by that stage, hopefully the results are starting to come through, and we can see the progress on the ground. It would be good to come and visit.
Yeah, and just
You're more than welcome. Yeah, look forward to that.
And just for listeners, this is Unicorn Mineral Resources. The ticker is UMR, and it's on the standard list of the main market.
Yep, and it's had a very good start. So Richard's smiling. I think, it's...
Well, after the stress of the last 12 months trying to put it together, it's a relief.
Yeah. The market capitalization was very low, though, when it came to market. No, I mean, it was valued at about 2.7 million, I think, was it?
Well, it's hard when you're doing a placing to judge what price you do it at. You don't want to go too high because then the share price won't go anywhere and there's no uplift for the new investors. And at the same time, you don't want to go too low. So we definitely didn't want to go below what the original investors invested at. So we picked a level that thought would be a success.
Yeah, and it seems to have been so far anyway. I mean, not much trading yet because it's not on many of the platforms, but we've requested that. So, if you're interested in this, as Phil says, ticker UMR, and it would be a story to follow. And I think it's going to be a story that you've come to market to prove it up, to sell it. And that's really very clear. And let's see how you get on.
Yeah, and we look forward to the obviously phase one of the exploration, including the 2,000 meters of drilling. I believe 6 drill holes. And thanks very much for coming on, Richard, and giving us an update on the company.
Thanks for having me.
Thanks, Richard.
So we, dare I say it again, we're starting to see a bit more excitement coming back into the markets with stocks doing 100%, 90%. There's Made.com was an interesting one, wasn't it? They basically effectively pulled the plug on any talks with potential suitors, and then we saw it drop 95%. That was a really, really nasty drop on that one. And I guess they mentioned that really they thought that the stock should be suspended, but it still continues to trade. And the following morning, when it had dropped in the evening, it dropped to the 0.5, and then the next morning it traded up, did 100%. So people are willing to risk putting the money into stocks like that, with the risk of, or potential risk of suspension looming.
It's just a complete gamble, isn't it? I mean, you're gambling. Made.com has more than 2 million of value, plus paying all its creditors, which is probably unlikely, to be honest. I think responsibly they should have suspended it and seen what happened.
So the movers this week saw Blanco Resources have a good week. That was an interesting RNS, wasn't it, about the funding? Basically, they announced 750,000 funding by way of a placing, and obviously saw some of the institutional investors coming on board, and RAB Capital being one of them that had increased their position. Jangada Mines also up there holding in Blanco Resources with something like 610,000 strategic investment, increasing their stake from 2% to 9.5%. So with an NPV of about $482 million based on a very small fraction of the resource, what do you think of that one? Do you think that's encouraging that they've managed to secure the extra funding?
Yeah, I mean, the reality of that situation is that the mining companies and RAB Capital know exactly what they're sitting on in terms of the graphite. That play now is completely about the finances, as far as I'm concerned. If the finances come in, then it's probably 10 bags from here. It's got to be worth 70, 80 million, maybe 100 million once the finance is in place. And it's currently got a market cap of 7.85 million. So, and an NPV of, as you say, $500 million. So let's say we discount that NPV by 20% or by, 20%, only take 20%. You're talking about market cap of £50 million. Whatever numbers you want to talk about, sorry, £100 million. If you take it only 10% of the NPV, you're talking about £50 million. So currently at the minute, it's sitting at 1.5% of the MPV, which is plainly ridiculous, to be honest with you.
While we're on the subject of graphite, we've also talked about sovereign metals. They obviously have been knocked back down. They're at a 52-week low around the 21 pence mark. What are your thoughts on that now in terms of the valuation and obviously the fact that they've just managed to complete the 61 air core drill results?
Basically, investors have got no patience. Simple as. I mean, the MPV on the overall project of the biggest rutile deposit in the entire world is crazy. I think it was $1.5 billion. They've got graphite as well. The RNS this week basically just said that it now goes down to between 20 and 25 meters, whereas the study that they had done before was only taking it down, I think, to between 10 and 15 meters. So the resource that they've found has just been increased dramatically, probably not by 100%, but, you know, a very high chunk percentage increase for sure. So the finances now don't make any sense. Again, we're talking about a very low percentage of net present value for something that is in deficit. I mean, we basically interviewed Sapan, and have a listen yourself. I mean, it looks and it is vastly undervalued. There seems to be a huge risk premium put on something that isn't as risky as the premium that's been put on it. But let's see if the market starts to realize that it is undervalued.
Yeah, look, I still make the point that when a project is the size of Cassia, and these things only come along, you know, once in a generation, and specifically in a commodity where all the supply demand dynamics are such that this commodity is undersupplied, it is over demanded into the future. You know, you've got to stop looking at this as your usual kind of mining project that has, you know, anything from 10, 15, 20-year mine life, and start thinking, actually, this thing could go on for ages, for absolute decades. And in that context, what's more important than, you know, what's the value of that project today is how much cash is this thing going to be spitting out over those decades. And you know, we've put numbers in our expanded scoping study showing that our EBITDA per annum would be something like $320 million per annum. And that's only over the 25 years that we've modeled this thing. And remember, those 25 years only mined 30% of the known resource. This was before we knew it goes deeper, et cetera, et cetera. So really, I would encourage people to stop thinking about this as a finite mining project that you look over a 10-year period and start thinking this could almost be like a utility.
I mean, it is the size of Manchester. We've discussed this in the past, haven't we? Greater Manchester, isn't it? From memory.
Look, the footprint's huge.
Yeah.
That means two things. Sometimes people think, oh, with a huge footprint come huge issues. But look, there's a number of benefits of having that. Firstly, we don't need to mine everywhere to be massively economic, right? So let's say there is a cultural heritage site somewhere, or there is a village somewhere, or there are people who don't want us to be mining near them. You just create a buffer zone and go elsewhere.
Yeah.
Right. You just go around those guys to other areas of the project and mine there. And now, knowing that, you know, this material actually goes deeper than we thought, it may be a point that we just stay in certain areas where we continue to mine for twice as long in one area rather than having to move on to the next stage.
Sure. And the other thing is, I mean, do you think the market's waiting for the PFS, for the pre-feasibility study before it starts? Because usually you've got like the Lassonde curve, you've got the different phases and everything. Do you think that will have a significant impact on the company?
Look, a PFS always has a significant impact on any mining company, and we're hoping for that PFS to come out mid-year next year. But that's not to say that there won't be enough, or hopefully enough, reasons to invest in Sovereign between now and then. You know, we're still working and talking to potential off-takers. We have 2 MOUs in place. We're hoping for a handful more of those in place. We are going to continue looking at test work programs for our rutile and our graphite. I think the market will start to understand the enormity of this project and the discovery of it. And we'll slowly de-risk this project as we get to the PFS stage. And at the PFS stage, we will, fingers crossed, have some decent economics to put out there and tell people, if we were to mine cassia, this is what it would look like on an economic basis. Hopefully that's in line with all of our expectations.
But the $350 million a year, this is assuming probably not even the current graphite price. This is a lower graphite price and also a lower rutile price than is currently in the market. Is that right or not?
Yeah, that's totally right. Look, those numbers, so that $320 million of EBITDA are based on a rutile price of about $1,100 a ton or $1,200 a ton. Current rutile prices are around $1,500 a ton. Spot market prices are around $2,200 a ton. So we've taken quite a significant kind of haircut there. On the graphite side, it's a lot more interesting in terms of the pricing, because we've taken a basket price of around $1,100 a ton of graphite, flake graphite concentrate, based on the type of flake size distribution in our concentrate. What we haven't done is then said, well, part of that flake size distribution will end up in the lithium ion battery space, and that space will obviously have the price in that arena is bound to go up. We haven't looked at those metrics. We have been given those metrics by other independent forecasters. Some forecasters have put out quite high, and I'm not going to go into the details of what those numbers are, but if you can, a quick Google can tell you what potential flake graphite concentrate prices could be out there. But we've again gone for something quite conservative, and that's with a view that, look, we know that we're in a inflationary period time frame here. We know that inflation will obviously hit our cost level, but we don't want to overcook any of the economics. We want economics that we can stand by, no matter what may happen in the macro environment.
Yeah, okay, all very positive, and we look forward to the progression of this project. I mean, I think this project is pretty essential for Malawi for a start, and also pretty essential for the world market in rutile and in graphite. I mean, there's going to be, I think, a very serious lack of both of these in the coming years. And you're going to be coming on stream just as that lack is coming to its peak, I think.
Yeah, look, in the rutile, I'll give you some numbers now. 2017, the world was producing about 700,000 tons of rutile, and that was being gobbled up quite easily back then. Today, we're producing about 500,000 tons. By the time we come online, the existing operations will be producing 250, 300,000 tons. So given that we are looking at only producing around 250,000 tons of rutile ourselves, all we'll be doing is bringing us back to today's supply levels. So we're not glutting the market. We're not expecting to really affect the price from where it is today in any major way. We're simply replacing those lost tons between now and when we come online.
And where are those lost tons coming from? Who's losing? Are any of the big majors basically running down rutile deposits?
No, look, there's two main sources of rutile mined in the world. One will be Sierra Rutile, which we're all aware of. Used to be an AIM-listed company, bought by the Australian guys at Iluka, and then it was demerged recently, so it's its own entity now. I think it's just sat on the ASX for now. It's an old mine, it's an old operation, and it's been in production since the 60s, I think. And what that means is all the easy stuff has been mined, and it's getting harder. As with any deposit, they always get harder and harder to mine over time. And then the other kind of major source of rutile production is from Base Resources Kwale project or Kwale mine, and look, that I think has another 2-3 years to run per their announcements. So what you're finding is there just isn't enough of this rutile being produced today to cater for the market.
So what's the chances of a major coming in and writing you a big check then?
I think that's always there's always a chance. I'm not going to put a probability number on it whatsoever, but look, we'll always do what's best for our shareholders, obviously, and that's what we're here to do.
Safwan Guy, CCO of Sovereign Metals, thanks very much for your time.
Brilliant. Thanks, Bill. Thanks, Kevin.
Thanks, Safwan. The other big news was African Pioneer this week. We saw the fact that the details of what's happening in Zambia, and the fact that actually this ground is more reminiscent of DC Congo, and therefore, if it is, then the potential in this ground is now phenomenal, absolutely phenomenal. So, what do you think of that one, Phil?
Well, African Pioneer was unbelievable, wasn't it? We talked to Colin at the beginning of the week when the news came out, and how big Zambia, and obviously that was a report, that was a quarterly drilling update from First Quantum themselves. So this is obviously that they're being the option partner on that. They've put together those results, and ultimately it just shows how big the potential is, really. In this area, the old Kiwara mine that obviously Colin sold to First Quantum, which has now become the Sentinel mine, which is something like the 14th largest copper mine in the world. It is a big one, isn't it, with massive revenues, and it's been functional for many years. It just goes to show how big the potential is. And then actually Pascal, the CEO of First Quantum, made an actual announcement, didn't he, on I think it was on the Tuesday morning, saying that they were really going back into Zambia to find new exploration licenses, and start the whole exploration process and the whole M&A, because it was just seen as such a great country to do business in, and it has such great assets.
Yeah, and Colin sold that other mine for $265 million over 10 years ago. Copper is now significantly higher in price, significantly more required than it was then. So, I mean, the values are mind-blowing. AFP owns, I think, 80% of that license. Yeah, the numbers are mind-blowing. You've got AFP, even after the uptick, being valued at around about £6 million, and it's not beyond the bounds that it's 300, 400, 500 million for this particular license that they've got an option on. That First Quantum are just gonna probably buy it off them ultimately if they prove that there is a mine, or there is enough resource. What is the upside of AFP? What do you think is the upside? I don't know another company in the market.
I generally don't know what the upside is, so I'm not going to even put a figure on it, but it's many multiples. If there is an interest from one of the major, they've obviously also got the Sandfire as well, working on the other projects at the Kalahari Copper Belt. AFP and Galileo Resources have a lot of similarities with the two partners on board. So the same for Galileo. We did the deep dive into the company, and it's the potential here is huge. So ultimately, I wouldn't want to put a figure on it, but it's many multiples of the current market cap.
And Sandfire have got 4 licenses, and it turns out that the 4 licenses have got themselves right in the middle of a discovery that has already been made. So it's actually becoming rather bizarre. Basically, they've got the opportunity with First Quantum, they've got the opportunity with Sandfire, they've also got 4 licenses themselves in that same Kalahari Copper Belt, and they've got their own possibility of production. I think it's in Namibia. So if you want to, in inverted commas, take a punt on a stock that has massive upside potential, and I mean massive, then this has got to be something that you consider. African Pioneer, have a look at it. Listen to the past podcasts. There's a few of them there that have done with Colin, and just have a think about it, because I really do think this is a game changer. This one, it really is.
Yeah. So, any others you want to talk about? Well, Ben had some news. Do you want to just talk us through what Ben? Obviously, we spoke to Adam. A very nice, short and sweet interview this week regarding the movement of the high wall mine onto the new permit area.
Yeah, I mean, Ben, a year old this week. Happy birthday, Ben. I won't sing. And
reminds me of the Michael Jackson song. I can't get that out of my head now. I've got the earworm.
And the two of us go here and there. Okay, Ben. There was some interesting stuff come out this week about a mine very close to them in West Virginia, basically doing the same thing. And they've just spent $100 million in revamping the whole place. So Ben have spent $30 million revamping the whole place with the funds that they've managed to generate and bring in. The asset values of everything that they have probably as a mine now is probably $100 million or thereabouts. The market capitalization is £100 million. So what are you now paying for? You're now paying for future production only, because all of the assets in the mine itself is probably worth the market capitalization as it stands. Now, what's happening? Basically, we're running into next year now. 2023 is going to be a year of just ramping up production. You're going to have two high wall miners. You're going to have the underground mine, which sadly we went and visited and went into, which I'm still having nightmares about. And effectively, you should be within a few months producing 70, 80, 85,000 tons of clean coal. This should equate to a running value of 1 million tons of coal. Now, what is that valued at? I don't know. A lot will depend on the value of metallurgical coal and what prices they manage to get over that year. But it's got to be worth more than it currently is, because the asset value of the mine is now very close to the market capitalization of the mine. So that's it. If you suddenly see a run and the metallurgical coal price runs back up to even 320, 350, then effectively you're going to be you should be doubling the share price and the profitability and the bottom line of Ben's Creek. So it really, for me, it's going to be a massive play on the metallurgical coal price, and that's it. But it's undervalued based on what it's doing now as it is. But if we see a run up in the met coal price, then, not the sky's the limit, but it's got a long way to go.
It's got a long way to go. Good. So the other one was Alchemy Capital Investments. I mentioned it a couple of weeks ago on the roast. I think it was around about the 103, 104 mark. And that's had another good run. I think it finished around 175 at the end of the session on Friday. So that it's an interesting one, isn't it? I watched a very good investor presentation that Paul did on. It was actually Proactive Investor 1-to-1 forum, and it looks very good, doesn't it? I mean, it looks like the Tees Valley Lithium, which is the company that is a subsidiary of Alchemy, looks like that if they get this plant built, which is on Teesside, and it has some very good infrastructure there. They have all the solar plant, the wind farms that are providing energy into the plant itself. And if they get the funding required through debt funding, it looks like with all the EBITDA that I've seen, the projections year on year look like it'd be a very profitable company.
Yeah, it's interesting. We've all been talking about mining the lithium, haven't we? But nobody's been talking about preparing the lithium so it can go into a battery. So if you back all the lithium miners and then there's nobody to actually sort the lithium out so that it can be put into a lithium battery, sort of what's the point? So there isn't another production of this stuff in Europe. This is the only one, I think, that's currently going, and Europe's going to need, I don't know the figures. We're going to talk to Paul next week, I think, but it's very interesting. The market capitalization of this company is not very big, considering £12 million, considering the potential EBITDA per annum that this company could generate is sort of very, very significant.
I mean, there's currently
Shard Capital had a note, didn't they? So if you can find that
Shard
online,
had like
have a look at it.
Shard had 614, and VSA Capital thought they were being a bit conservative, so they upped theirs to 800 pence a share. So that gives you an idea of what the potential is. But there's currently zero lithium production capacity in Europe in terms of actual preparations for the batteries. And then Europe's going to have 700 gigawatts of gigafactories by 2025. So, and they're going to need over 325,000 tons of lithium hydroxide and carbonate on a yearly basis. So as they ramp up the production and there's more gigafactories, then obviously they're going to need more of this lithium hydroxide and carbonate. And it's interesting because they're going to get a lot of the feedstock, aren't they? Rather than like Australia and that are going to be actually sending the feedstock, the lithium, because it's got to go in. Is it spodumite or spodumate? There's a name for it that feeds these
spodgy something.
Yeah, that is what I mean. China controls 90% of the world's lithium hydroxide and carbonate right now. So ultimately, if they can get a better deal on the feedstock to actually provide that into the plant, then ultimately it's going to be great. So I think it's definitely one to watch out. And as I say, I'm really looking forward to getting more into the numbers. And it's a plug and play plant, isn't it? Where they've got the space on the Tees Valley. What's the name for it?
It's a chemical park.
It is a park. That's the one. So that basically they've got the park there. Semcorp, I believe, own it. But yeah, they've got the primary lithium sulfate going in, the crude carbonate, the brine, because obviously we've talked about lithium brine, then the crude carbonate, mica, and recycled material. And it goes into this plug and play plant, which is what they're going to obviously need the funding for. I think it's like 240 million required, isn't it, to actually build this plant?
No, it's very interesting, and I suppose it goes back similar to the Unicorn situation that we've just been talking about. I mean, Unicorn has 27 million shares in issue. More than, I think, half of that is held by directors and TR1 holders. And basically, they've just issued 9 million shares. And that's going to be the free float. So maybe you're talking about 4 or 5 million free float, and I think Alchemy is not much different. I'm just having a look here how many shares they have in issue. In fact, I think it's less. 7.2 million shares in issue, and I haven't dug deep, but I think there's a large proportion of those that are owned by the management and big shareholders. Who are looking obviously to see this plan go. It's got a 52-week high of £2.10p, and you can currently buy it for 175, I think, and it's lithium. I mean, what isn't going up that's lithium at the minute? If we're honest, if you seem to say the word lithium, it's gonna make a difference. So this seems like a great opportunity, and the missing link, if you like. You may have the miner, you may have the gigafactory, but if you don't have this in the middle, you don't have any lithium. So, lithium hydroxide, as you said. So, yeah, very interesting, and yeah, looking forward to speaking to Paul.
Good. On that note, should we wrap things up?
Yeah.
What are you looking forward to next week? We've got obviously the Jeremy Hunt announced through Rishi Sunak that the budget or the autumn interim budget would not be held. So it's been delayed to something like, I think it's November the 17th now.
Yeah, so, he's not coming to the COP27.
He's not, what a cop out. What a cop out.
He's not coming to Egypt anymore, so Sharm el-Sheikh.
I mean, does that not miff you a little bit? That it's like, the whole green thing. I get it, and that the environment changes and all the impacts and global warming, and he's just, I'm sorry, I'm a bit busy that week. Yeah, I know he's got pressing things to do. I know he's got a lot of work to do and a lot of things to create. But surely he can take a day out of his busy schedule to go and actually sit at what is a pretty important meeting.
My opinion is he's being wise. He needs to concentrate on the UK. He's sending a team of people. What's the problem? I think nothing necessarily is going to be massively decided at this thing. Unless he wants to go and get some sunshine in Sharm I think
I'll go and get eaten by a shark.
The reality is the best thing for him to do is stay exactly where he is and make sure that the budget, or not the budget, but the analysis of the economy is looked after. So I think he's doing the right thing and he's sending the right message.
Yeah. All right, good.
That's my opinion.
Yeah, on that note, have a good weekend and we'll catch up with you next week.
Yep. Enjoy.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.